what I see now is not the environment that I was thinking that I would, switch to the U.S. To invest. What I'm waiting for is for the real crash to happen, right? For the dollar to crash, the markets to crash, for the deficit, the fiscal chickens, currency chickens to come home to roost. So we get a real crash, something like a 1929, although it, probably won't be nominal, but we get a bad decline. We get or like we had in the early 1980s, at the end of the 70s, we get a big drop where U.S. stocks are actually cheap. I mean, they're historically expensive right now. So the time to load the boat with U.S. stocks is not when they're historically expensive. I'm waiting for blood in the streets, right? I want the collapse to happen. And then
in today's news recap, silver short squeeze coming. The Federal Reserve cut interest rates for the first time in over 4 years in September, sending gold past a record-setting $2,500 an ounce. The aggressive 0.5 percentage point reduction was in response to the Fed's significant progress in bringing down inflation, as well as a slowing U.S. economy, evoking recession fears. Gold's rally, which started in mid-February, has been underpinned by increased geopolitical risks, the upcoming U.S. election, central bank buying, and slowing ETF sales. It last traded at $2,744 an ounce, up 37% so far in 2024. But silver has done even better, notching a year-to-date gain of 46%. Spot silver is now worth $33.67 as of Monday, 2030 New York time. Last Tuesday, it hit $34, the highest level since 2012. Silver has benefited mostly due to physical buying in India and China. So-called paper silver has also been a factor. In July, 2 months of outflows reversed to inflows. However, October has been the best month on record for gold ETFs, after silver struck a near 12-year peak on Monday, October. 21, Citi Research revised its 6 to 12-month forecast for silver prices upward to $40 per ounce from $38 per ounce. UBS Bank is also bullish on silver, with the caveat that the gold-silver ratio rose above 85 to 1 in September after hitting lows of around 73x in May. Despite this, we maintain our view that silver is set to benefit from a rising gold price environment, which is aligned with Fed policy easing. Analysts at the bank said, our expectation that the silver market will remain in deficit over the coming years implies continuous declines in above-ground inventories, which should help fundamentally underpin prices as well as act as a tailwind for investor interest. We see silver outperforming gold over 12 months, with the potential for its ratio to test the long-term average of just below 70x. The unexpected price surge has put 5 U.S. banks at risk of substantial losses due to their large silver short positions. A short squeeze refers to a situation where an individual or legal entity sells an asset in the future without owning it first, in the hope of buying it back later at a lower price to make a profit. However, if the price of this asset increases instead of falling as expected, this individual or legal entity is forced to buy it quickly to honor the delivery of their forward sale. This hasty buying movement then contributes to accentuating the rise in prices. Now we'll show you more clips of the latest interview, but remember to smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
So in that environment, when the dollar is way down, the U.S. stock markets are way down, we're in a really bad depression environment. But I can see the light at the end of the tunnel because I know that what we're doing is going to pay off in the long run. That's when I want to take my appreciated foreign currencies and foreign stocks and gold and all that, and I want to go in and buy America on sale. We're nowhere near that point, right? So I'm staying the course because I'm confident that at the end of the day, my strategy is going to prevail. So I would encourage people, because I know most of my clients don't have all their money in my strategy. Some do. I have all my money in my strategy pretty much. But a lot of my clients don't. They have allocations to U.S. stocks. And with me, they have their foreign stocks. I had a U.S. mutual fund at one time that focused all on U.S. stocks. And we kind of emphasized ones that did a lot of exports, but it was all a domestic portfolio. But I ended up shutting it down because my clients just didn't want to buy it. I mean, we had it out there for years and years, and I lost money because people saw me as their foreign stock broker, not their domestic stock broker. Okay, fine. I mean, that's a niche that I'm happy to operate in because everybody should have some money abroad. But to the extent that you still have money in the U.S. stock market, fade this Trump rally. I mean, I don't know how many more days or weeks or even months it can go on. I mean, I have a feeling that the Trump honeymoon is going to end even before, he gets to the altar in January. But I would be selling into this and allocating more money with the dollar now just rising these last couple of days. The euro actually got below 107 today. I mean, it's not on a new low for the year, but it was just up at around 111, 112, 12 high before the election. So that makes foreign stocks cheaper. And of course, they haven't seen the big rise that the U.S. stocks have seen. So you could sell some more foreign stocks because obviously your domestic allocation has now gone up and your foreign allocation has gone down. So I would move more money out of expensive stocks. Warren Buffett, right, supposedly the greatest U.S. investor of them all, is sitting on a pile of cash, and he's probably raising more as the market's going up. Now, he should be sitting on a pile of gold instead of a pile of cash, but I guess that's something that he doesn't want to do. But as a value investor, he just does not see value in the U.S. stock market, and I agree. But I think there's a lot more problems coming up for the U.S. stock market than Warren Buffett is willing to admit. I mean, he may see the problems, but he's not going to admit to them. Anyway, let me move forward to the Fed rate cut, which really was kind of lost in the noise this week. I mean, normally a Fed rate cut would be a much bigger event, but given it happened the day after the presidential election, nobody really paid attention. Now, I know there were some people who thought, well, maybe the Fed won't cut given, what's now happened, right? We're going to have all these tax cuts. Bond yields are rising. That should, push up inflation. Most people think that economic growth causes inflation. They're wrong, but that's what they think. And so you would think we're going to have a stronger economy, the Fed should reconsider the rate cuts and maybe pause or maybe even hike rates. And I thought, well, there's no chance the Fed's going to do that. Trump would go ballistic. They're going to cut. And that's exactly what they did. But, one of the reasons, again, the dollar has been so strong is that people are thinking, well, maybe the Fed won't cut as much now that we're going to have this stronger economy. If the Fed was going to do that, it would have done it. I don't think so. I think the Fed is going to cut as much as it can get away with. It would have done the same thing under Harris, and it's going to continue to do it under Trump. It will cut as much as it can. They're trying to claim that they're still restrictive. They've never been restrictive, and now they're less stimulative because they never got rates into restrictive territory.
In today's news recap, silver weekly price outlook. Silver falls but look likely to bounce. The silver market spent most of the week falling, but it has shown some signs of life as we are starting to see at least a bounce a bit towards the end of the week. We'll have to see whether or not that holds, but either way, silver is in an uptrend, and I just don't see why you would choose to fight that trend at this moment. If we can turn around and break above the $32.50 level, then it's possible that the market could go much higher, perhaps reaching all the way to the $35 level again. Underneath the current pricing, we have the $30 level just waiting to offer a bit of a floor. And as long as we can stay above there, then I think the market is probably going to be okay from an upward trajectory standpoint. Either way, it's worth noting that silver is very choppy and volatile and will continue to be something that people will have to pay close attention to. But at the end of the day, it's driven by the US dollar interest rates and geopolitics. Most things right now are starting to point to an upward trajectory again, but we'll have to wait and see how that plays out. Either way, I don't have any interest in trying to short the silver market. It has been far too strong for far too long. If we were to break down below the $30 level, then you have to start to ask questions. But even then, I think you have some work to do before you can get to the place where you think that you should be a short seller of silver. Keep your position signs reasonable. That's the most important thing when trading silver because of its inherent volatility. Now, we'll show you more clips, but first, smash the subscribe button and turn on notifications so you do not miss out our daily videos.
And it turns out that we really can't afford to give all these tax cuts. In fact, we really need higher taxes if we can't get some serious cuts in spending. And so that's what we're going to try. I'm going to ask Americans to pitch in and tighten their belts. I know you've been struggling. And it's going to get worse for a while. But trust me, if we swallow this bitter tasting medicine in a couple of years, we'll be on the right track. But, it's going to be tough. We're going to have to make some major cuts to Social Security and Medicare. And I know that's going to be difficult for a lot of people who have been counting on the money, but, the money's not there. There's not much that we can do about that. We're going to have to, cut other spending across the board. We're, make cuts to military spending too. Interest rates, unfortunately, have to go up. I mean, I know I love low interest rates, but the economy needs higher interest rates because we don't save enough. And we need to make things again. We need to manufacture. I mean, I was correct about that, but the transition is going to take longer than I thought. And in order to facilitate it, we're going to have to rebuild our savings. So we're going to have to spend a lot less, borrow a lot less, and save. And we're going to have to go back to work. We're going to have to roll up our sleeves and work. And I know it's going to be tough, but we're going to deregulate. We're going to make it easier. We're going to remove a lot of regulations, assuming I can get this agenda through Congress. But I'm going to fight, with every fiber of my being to try to get the Republicans on board with an austerity program of cutting government spending and getting us on a sound fiscal footing so we can rebuild and really truly make America great again. There's no way Trump's going to make that speech. He's not going to do that. He is going to do exactly what he did the first time he was president, except worse, right? The tax cuts that are on the table now are much bigger than anything that he proposed because he wants to keep all the tax cuts from before, right? He wants to extend the tax cuts he already has, except he wants to bring back the SALT deduction, right? That was one of the things that was in the original Trump, tax cut. A trade-off was, you can no longer get a full deduction for your state and local taxes. They capped it at 10. Well, he's promised to get rid of that in the renewal. So it's an even bigger tax cut than the original one. But on top of that, right, he wants to exempt tips, overtime, Social Security, policemen, firemen, veterans. I mean, all the various tax breaks that he's thrown out there at a time when the deficit dwarfs what it was, and the deficits dwarf what they were when Trump first came to office. But it all sounds great, and people are all optimistic. Yeah, my taxes are going to get cut, and Trump keeps talking about how great the economy was when he was president before. It was the greatest economy in the history of the country. And now it's the worst economy in the history of the country. And they're just, they're separated by just a year or two. And the whole difference between we went from the greatest economy in the history of the world to the worst economy in the history of the world, just because we had Harris and Biden for 4 years. I mean, if the economy really was the greatest that it's ever been, there is no way it could have been wrecked so quickly by Biden. I mean, you can't turn the greatest economy in the history of the world into the worst economy in the history of the world just with one Inflation Reduction Act or one CHIP Act. Yeah, I know they were bad bills, but a strong economy could have absorbed it. The problem was we didn't have a strong economy. We had a bubble. We had a fragile economy. In fact, we've been blowing a bubble in this economy ever since the 1990s. Greenspan is the architect.
And that's a wrap. Peter Schiff just laid out his bold predictions for gold, the dollar, and the broader economy. What do you think of his analysis? Do his insights resonate with you, or do you have a different take? Let us know in the comments. And if you're here for more hard-hitting insights and no-nonsense predictions, don't forget to hit subscribe. Now check this video right here because you'll love it. I'll see you on the other side.